Hey everyone, welcome back to Corporate Decoder. Today we are going to dissect a filing from Nuwellis, and trust me, it's got more twists and turns than a medical drama, especially considering what this company actually does, which is related to health. Before we get started, if you appreciate us cutting through corporate jargon, make sure to subscribe. Also, join our Discord community linked in the description below for more discussions. Here's a quick summary. Nuwellis, a medical device company, just made a deal with its CEO involving some special stock. It's all about avoiding one person having too much power, but is there more to it? Let's dive in. First, we're looking at what's called entry into a material definitive agreement. Think of it like this. A company made a deal that's important enough to tell everyone about. In this case, it involves some special preferred stock and the CEO. Now, we need to talk about some changes to the company's rules. This is related to something called amendments to Articles of Incorporation. It's like a company updating its constitution. Here they're creating a new type of preferred stock called Series F1 Convertible Preferred Stock. They authorize the issuance of 100 shares of this stock. Preferred stock is a special kind of stock that has certain advantages, such as getting paid dividends profit sharing before common stockholders. This stock can also be converted into regular common stock under certain conditions. The important part here is about the Series F1 Convertible Preferred Stock, and it states that the company won't allow the stock to be converted into common stock if it means the holder, which is John Erb in this case, would own more than almost 20% of the company's total common stock. That number is 19.99%. This is a common move companies make to stop any one person from having too much control of the company. On June 9, Nuwellis made an agreement called the Exchange Agreement with their CEO, John L. Erb. Basically, the company is swapping 100 shares of an older version of preferred stock, the existing Series F stock, for 100 shares of this new Series F1 stock. So after this swap, Mr. Erb will own all of the Series F1 stock. Let's quickly look at the securities exchange agreement that was entered between the company and John L. Erb, and quickly at the certificate of designations of preferences, rights, and limitations of Series F1 convertible preferred stock. So, what does this mean for Nuwellis? Let's break it down. First, the move looks like it's about keeping the CEO's ownership in check, preventing any potential issues with him having too much control. This can be seen as a good thing for other investors since it limits the power any one person can have. However, it's worth asking, why do this at all? Is there a potential risk that the CEO might have wanted more than 19.99% ownership? We don't know, but it's a question worth considering. It's also interesting that the terms of the new Series F1 stock are substantially similar to the older Series F stock except for this ownership limit. This suggests that the company is happy with the existing terms, but just wants to add this extra layer of control. Nuwellis is a small company, and moves like this can have a big impact. The market might see this as a sign of good governance, since it limits potential risks of a single person having too much power. However, they also might see it as a sign that there could have been disagreements about ownership, so it's definitely something to keep an eye on. Alright, that's our breakdown of Nuwellis' latest filing. What's your take on these stock moves and what they might signal for the company's future? Drop your thoughts in the comments. If you found this analysis useful, please hit that like button and subscribe for more deep dives into the world of corporate filings. Also, don't forget to check out the Discord in the description below. Thanks for watching and see you next time.